So, ladies and gentlemen, I'm starting a little bit early just because it's Memorial Day. And firstly, mad love to all the veterans out there, man. I want to just address something with you all about what could be developing with Bitcoin. And I'm going to pull together a couple of scenarios that's going to help you understand whether or not Bitcoin is done with this all-time high, or is there still more opportunity for Bitcoin to climb higher. Ultimately, in the live stream from this morning, our goal is to help work out what point are we in with Bitcoin's price. Is it accumulation? Is it distribution? Okay. And the difference between the two is are people buying or are people selling in principle? Now, tonight's topic is about the cohort of who is buying and who is selling Bitcoin. Is it the big boys? Is it the retailers? What is actually going on? And we're just going to dive into a little bit of on-chain because it's starting to make sense where the participation of people who are buying and selling Bitcoin, whether it's whales or institutional investors, that's going to lead us into an expectation of what we can expect from Bitcoin's future price. Now, in the news front, there's not that much happening other than what Trump media said about a very, very legitimate, reputable, and high integrity news anchor, for the better word, the Financial Times. You don't really want to be calling that company dumb writers. And I'm saying that because I actually spoke to the chief editor one time, asking him how was it possible that Goldman Sachs was able to offer these high rates of return on certain bank account deposits if you open them with them. And even he was like, hold on, is that actually happening? And it was at the time when interest rates were flying up and there was this thing about where's the money going to come from? How is the US going to sustain itself? How are banks being able to offer more rates of return as opposed to conventional banks? Anyways, so I'm going to get into it tonight, guys. Break it all down for you. Come with a couple of ideas. And maybe you can take that information and say, you know what, maybe, or forget it, Bitcoin to the moon, right? So let's get with the program, ladies and gentlemen. Let's have a conversation, man. So it all starts off with this, okay? Trump Media Group plans to raise $3 billion to spend on cryptocurrencies. Naturally, you hear that, you think, yeah, baby, that is awesome. At the same token, you get Trump Media coming out saying that dumb writers behind the report claiming it's seeking $3 billion to buy Bitcoin. Financial Times citing 6 anonymous sources reported that Trump Media and Technology Group plans to raise $3 billion to invest in Bitcoin and cryptocurrencies. All right. Goes on to say that the firm has been linked to several blockchain initiatives, including a utility token made in America, ETFs and TrueFi, and fintech startup with digital currency ambitions. But then it goes on to say that Trump Media denied the story, reportedly stating that the Financial Times has dumb writers. Ladies and gentlemen, the Financial Times does not have dumb writers. Like the FT, like it's your UK version of the Wall Street Journal to a degree, but it's been around for a long, long time. And the pink sheets had all the quotes of all the stocks. I mean, this thing has been going on for a long, long time. To say it's backed by dumb writers, I mean, come on. You don't really want to be gunning for the Financial Times. Now, the topic that I want to address tonight with you is this. Bitcoin's bullish momentum cools despite Strategy's latest 4,020 Bitcoin purchase. We get it. Sailor's buying. That's it. There's nothing else that we can do about it. He will always be buying, regardless of the class action, that court case that they're trying to put onto them. It doesn't matter. They're just going to keep on buying. They really are trying to match the balance on the ETF. Now, the ETF balance is coming into play at 652,000. And then, of course, we've got some maneuverability on Grayscale. They seem to be moving Bitcoin up and down all the time, but nothing has been taken off. This balance keeps on going up, and this balance seems to be pretty dormant, but, you know, 652,000, we are at all-time highs on the ETF balance as such. Now, let me get to this story here. This article goes on to talk about the strategy purchase, but then it goes on to talk about this. It says here, as of May 26th, the number of Bitcoin holders cohort has pivoted to net distribution, signaling a notable shift in positioning amongst the largest holders. To put into perspective, we're making reference to this, okay? This is what this post is about. This post, without diving too deeply into it, gives us an understanding of where the big boys with more than 10,000 Bitcoin in their wallets, what are they doing? Now, it goes on to explain that there is currently a shift in the leadership of the holders. In other words, the guys with more Bitcoin in their wallets are potentially taking some profits, okay? That's what happens when you buy something of value and it increases in value. You tend to take profits from it. And that usually comes from the bigger holders because they have a lot of Bitcoin in their wallets, but they also want to take some money off the table to prepare their balances for the next dip. Because you ain't going to be getting no Bitcoin holder that holds 10,000 Bitcoin or more buying Bitcoin at silly high prices. He's taking that liquidity and then he's going to get ready to start buying the dip so that his dollar cost average works out favorable. Now, let me explain something. What is dollar cost average? Everybody and their nan or dog would understand that when dollar cost average comes into play, it's on the premise that when prices are going down, you're buying as it's going down with the idea that it's going to keep on going back up. But the problem in cryptocurrency, when Bitcoin last hit the all-time high of 69,000, was everyone was dollar cost averaging from there. And then they just kept on buying the Bitcoin as it kept on going lower. Then it got to a point of capitulation where the guys that were buying it couldn't handle it anymore. And then Bitcoin ended up stabilizing and then started to make the move to the upside. All the guys that couldn't handle the drop to the downside ended up rushing in on Bitcoin's move to the upside. And they effectively, they ruined their DCA in principle, okay? They would have had to have sit through a huge drawdown, which psychologically did challenge a lot of people. So what's the fine art of dollar cost average? Dollar cost average is on the premise that you have a rally or a move to the upside, because the logic says that when prices are going up, your dollar cost average or your asset has effectively appreciated in value on the idea that you've been buying it as it goes down, with the idea that you're going to sell it as it moves up in principle, okay? But this is how you really take advantage of dollar cost average. You've got to establish that you are already in a move to the upside. Why? Because you improve the probability or the expected outcome of your purchase to see a return as you get involved in dollar cost averaging. In other words, prices come down, it stabilizes, it moves up. This is a dollar cost average entry right here. Where we go? What's going on here? Here we go. This is a dollar cost average entry, rally. This is a dollar cost average entry, rally. This is a dollar cost average entry, rally, dollar cost average entry, dollar cost average entry. And you can see these are the points that you do your dollar cost averaging, okay? So when it pulls back, you're buying those dips. And then effectively, if the idea of it's going to continue higher, it will then be appreciating. That is a valid way to approach dollar cost averaging on the assumption that we are in a bull run, okay? So if you've been witnessing price taking a nosedive for a long period of time, you might be looking at it thinking, oh, God, I could have bought Bitcoin on the cheap. But the thing is if you're buying Bitcoin as it's going lower, your appreciation is getting wiped because you're just losing value of your purchase. It's getting lower and lower and you're losing, which means that you are effectively ending up having to pay more as it goes lower, okay? But once you then see price stabilizing and then it starts to rise up, the dollar cost averaging then works in your favor, which means that for every time it does make a recovery back up, the dips that pull back or the peaks that it makes, those are opportunities for you to take profit. And then the profit that you take allows you to dollar cost average inside these low points, which will then effectively give you a more position exposure in this area. And then you can do the same again up here. That's exactly what's going on right here. The whales that have been dollar cost averaging on Bitcoin's move to the upside, every time price dips, they effectively buy it. Then when it rallies, they take profit. Then on the next dip, they have more to buy, and then it rallies, and then it improves their probability, or should I say their profitability of their holdings, which is why they do sell at these high points. And then when price does make a high, it then makes everybody think, well, no one would be selling when Bitcoin's peaking out. They are selling the Bitcoin as it's making the highs because they are effectively preparing it for the next rally. They will always prepare it. Just look at the fundamentals here on the dollar cost averaging. Yeah. Look at how this rally to the upside here, this move up, effectively, they buy aggressively because when Bitcoin moves down aggressively, that's grabbing the attention of a lot of the whales. So they're buying up aggressively, which is it's equally making a recovery back up because they're buying and then it ends up being sold as it moves up. They then take that profit. They then start buying again inside of this range. Look at this dude right here, 6.8 million. He's bought on the dip. He then sells it as it comes back up again. He takes that profit. Then the next dip, he comes in and buys up again. And then he sells it, buys it up. So what's going on is he's stacking his Bitcoin whilst it's appreciating at the same time. Whereas before, when Bitcoin was at the all-time high of 69,000, people were buying it, but it was depreciating and forcing people to buy more with other cash or hard cash to go and convert more Bitcoin because their value was being lost as price was going down. When you're dollar cost averaging as prices are moving up, you are technically getting the Bitcoin for free. Why? Because when you buy at these low points, and then you effectively sell a portion at the highs, the next low point on the premise that it's going to continue higher, you can buy these points with that profit and then rinse and repeat on the rallies. That's why you sell the rallies and you buy the dips. This right here is a true way of doing dollar cost averaging on the idea that you've got yourself a rally. Now we go over to Bitcoin's price and we can see that Bitcoin has been doing we can get a good idea on dollar cost averaging that's coming into play right now. So let's just take out Bitcoin from when it went down to 78,000. Okay. Where can you identify the dollar cost averaging coming into play? Well, we would make the assumption that this area here is a dollar cost average moment, okay, where they're buying it and then it equally makes a move higher. They then start selling those profits and then they start taking advantage of entering again. It then builds a position, it rallies up. They then consolidate, take some profits, and they rinse and repeat and do the same thing again. So this is what's been going on with Bitcoin. So it would look like we are in a positive dollar cost average scenario, where every time you do buy the dips, Bitcoin follows through and continues to mark higher. Now, what we're looking at right now is Bitcoin is pulling back ever so slightly, but it has been making a bit of a decent run to the upside. But of course, with the story of where everything is right now in terms of tariffs, and of course, this article right here that's come out about Germany's Merz backs Ukraine's long-range missile strikes on Russia. What does that tell you? Well, Trump stopped the Pakistan and the India war, but this ceasefire talks with Russia and Ukraine are going out the window when everyone's like, okay, let's start sending them more weapons. So you kind of like getting the idea that we could be getting ready for another event that is brewing in the future, or the idea that Putin and Zelensky having a conversation ain't going to be working and Trump might have a little bit of a problem in stopping that war. He'll then put sanctions on Russia, fine, but then you're going to let Ukraine have the backing of everyone else in the Eurozone, the UK and the US to get more weapons to do what? Continue with the war. Like only last week we were talking about peace talks and ceasefires, and now we're talking about more restrictions being lifted on weapons being supplied to Kiev. So you can see that the markets are now going to start slowly pricing this logic in play, okay? So to put it into perspective, when we go back to this story here about the holders, what I am saying to you all is don't think that this is bad news, because it's not. It's part of the game. The holders aren't going to be sat there with 10,000 Bitcoin or more and do nothing with it. There'll be a portion of it that they allocate to just keeping in their wallets, but they will then take advantage of taking some profits, because if the expectation of Bitcoin pulling back in the future is going to happen, they've made some money and then they're going to put that money to work on the dips. Okay. And that, in my opinion, is where we are right now, where the bigger holders are starting to take profits. What's leading them to do that? Number of things. You've got data coming out this week that could impact the marketplace. Even the fact that Trump did extend the deadline for the European tariffs, we know that there's still going to be a bit of a problem with that story. If you look at the way the markets reacted today to that on thin volume, you could make the assumption that going into the Asian session tonight, they're probably going to continue higher, but they've already reacted to the information, and the euro has pretty much made its move and consolidated. And you can see right now that euro today hasn't done anything, but it's preparing itself to make another move higher. Why? Because fundamentally, there's two things that are supporting the euro. Yeah, the tariffs have come into play, which does have an impact. If you look at the Canadian tariffs and the Mexican tariffs at the time when those things came out, what happened to those currencies? They slumped, okay? When the tariff was put onto the Eurozone, when Trump announced it, what did euro do? It made a little bit of a move, but then it continued to move back up. What's that? That is safe haven expectations. That is also the idea that you can get euro on the cheap because the US dollar is still expensive to borrow. 4.5% still up there. The pound comes in second place at 4.25, and then the euro at the bottom right here, 2.4%, with the prospect of them actually decreasing it even more because they really need to get access to that funding and that money so that they can still spend on their defense. Why are they spending so much on their defense? Probably because they've got a war to maintain. And that's possibly what the story is. But that's just me speculating. So, taking it back to Bitcoin's price action, we look at Bitcoin today and we go over and look at Solana, we go and look at Ethereum. Today I provided setups for everybody in the Platinum membership. If you haven't got access to that, go check it out. I'll just give you an example of what it was like today. I'd say the entry points were really, really good, but because of the market today was a little bit flat. So this is one of the entry points. So we'll go over to gold. Gold logic right here was we wanted to see higher price movements. Entries at around the 3,330 on the idea that gold had swept the Asian session to effectively then make the recovery back up. We go and have a look at gold, and you can see that it's very slowly made a move up, very close towards the first target. But I have an expectation that gold is going to continue higher because things like this, and of course, the bigger picture of where we are from a macro perspective. And tomorrow it's going to change because we've got data coming out regarding core durable goods and the durable goods orders, which is going to give us an understanding of where we are with the economy. Okay. Now, this is what I was talking about in terms of entries. So this was Bitcoin. This was very hard because I said to everybody that I'm anticipating that they're going to sweep the Asian session. Now, I said that if you take the entry of 109,700, you run the risk of a stop run to come back into this vector candle region. So consider that if you do take that entry, you do run the risk of exposure on your account. So use light size. Second entry would be 110,474. Third entry could be around 111,056. Okay. We go over to Bitcoin's price action. You can see that it tapped the 110,423. They made the sweep to the Asian session high, which is what we wanted, and then they made the reversal to the downside. Now, in terms of targets, I was a little bit optimistic about the target. I wanted to see 107,000 because I'd expected that there's going to be volatility with crypto. But instead, we got the 109,291 because what they did was they made the move up, filled these orders in principle to then come back down. It all depends on when those guys took the trades. But we do see that Bitcoin is working its way down past the daily open, and the expectation for the green vector candle recovery is what we were looking for. Now, the only thing that really did really well was effectively Ethereum. She continued from this. No, that's the wrong one. That's the wrong chart. This is the chart. But anyways, we wanted to see shorts on Ethereum at 2557, and we ended up getting from 2557. It was very hard, 2557 right there. We didn't really get that much movement because the day's been pretty flat. So Ethereum really didn't move that much. But if you took the entry at this level right here, you would have seen a bit of a drawdown, but then it would have come all the way down to 2525. Happy days. And then finally, Solana was the only really one that made the move. So wanted to see Solana try and take the Asian session high, but they didn't. We got the 17841 entry. And then, of course, we got, here it is right here, right there, 17880. So if you took that entry, you would have then seen the success of the move to the downside on the green vector candle midpoint at 173.46. And you can see that's what we wanted, 173.75. We got 173.46. So it's just a little bit inside of that range, but the day has been slow regardless. So, and the NASDAQ itself ended up closing halfway through the session. And that itself was a little bit of a tricky time as well. After the stop run lower, wanted to see NASDAQ go lower, but it didn't quite get that. And now we've got a blue vector candle region right there, which could be an indication of where it's likely to end up later on. Okay. So to put it all into perspective, ladies and gentlemen, yes, these big boys right here are starting to take advantage of Bitcoin's high value in profit or price, and they are then effectively preparing for another purchase. So by the principle of the story of dollar cost averaging, we look at the chart and say to ourselves, are we in the midst of that story unfolding? In other words, where could we assume that players are buying Bitcoin with the intention to sell later on? Go to the order flow, look back. What do you see? Are we, ladies and gentlemen, in a buyer's market or in a seller's market? I want to know before we continue. What kind of market are we in? A buyer's market or a seller's market? Give me your flavor whilst I have a look at all your comments for 2 seconds. Buyer's market or seller's market? You can't, Perez, with the platinum membership, you can't, my friend. But before you consider the platinum membership, take advantage of the front page on the Traders Reality website. It gives you everything that you need. So if you are completely new, that is. Okay, so anybody new, just go to the front page of the Traders Reality website, work through all this. It tells you, download this PDF, tells you how to get to the Discord, and of course, download the indicators, and it shows you how to install them. And then go to the memberships tab itself where it says join, and then just go into the section of the platinum membership where you get the majority of all the setups. Do 5+ setups every single day. It's more than 5. It's actually 3 times a day, every single day, Monday through to Friday. So I need to either change that amount or just keep it there and then over deliver in principle. That's funny, that is. Anyways, so here we go. Sell, sell. Who's saying buys? Sell, 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 guys. Sell. Sellers, of course. Buyers, sellers, 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 sellers. Okay, wonderful. Okay, so the people that are saying buys is because they're of the expectation that people buy. Markets move up when people are buying. Principally, that is correct. That markets do move up when people are buying, but the only way that they can buy is if someone sells. So you can't sell if no one's buying. You can't buy if no one sells. And then I've got some people that come to the channel and they're like, Tino, the market's a little bit more intricate than that. That's what it's all about. Well, yes, you know, it's not just about buying and selling. Well, it is. I mean, we can really go deeper and deeper into it and look at delta neutral strategies from the dealers and the market makers. You can start considering options with gamma exposure and all of that stuff. You can look at certain swap markets, interest rate traders. You can look at credit default swaps and what have you. All the various assets out there that are being offered to players of the market. Fundamentally, they buy them and they sell them. There's nothing else in between. What you're going to have, if they're not buying it or they're not selling it or they're not selling it or they're not buying it, what do you have? No market. And that's the participation of Mr. Market Maker to make sure that he solidifies that free flow of prices being able to move up and down because people have the luxury of buying and selling. When someone says it's not just about buying and selling, well, logic is that. Now, behind the way the buying and selling is programmed, well, that's where the art of trading comes in and the idea of speculation. And that's when you look at charts like this, where I go and ask you, is Bitcoin in a seller's market or in a buyer's market? Those of you that said seller's market were correct. And those of you that will ask, how are we in a seller's market if prices are going up? because people are selling as it goes up. Look at this. Why do you see more of this pink stuff than you do the green stuff? Why is it that the green stuff doesn't look as concentrated as the pink stuff? Because the pink stuff is the stuff that's being sold. They quickly do some DCA flavor in here, buy a bit, and then Bitcoin shoots up aggressively. That makes them the profit. And then they're now waiting for the next wave, where if the participation of buyers in terms of the bids down here comes into action and they start to load up the book, then the market will naturally gravitate to that point because there is a demand. Look, they're planting liquidity in this area. That is money sitting there right now. And what the market in principle does is it goes to where the liquidity is. And it looks like it's even across the board. But what you end up seeing is after such a high concentration of selling coming into play, then the participants that have been selling are currently sat with cash in their pockets thinking, right, when can I get in on the next dip? And then the market then starts to turn. And that's what grabs their attention, because all those holders right now are stacked with profits. It says in this article that it's the retail traders that are holding price. Of course they are, because they're the ones that are doing the buying as it's going up, but they're selling, they're being sold to by these dudes right here, the bigger holders. So it's not bad news. It's just telling you that there is a change in the way that the buying and selling is happening. I mean, are these sellers selling right now because of what's going on the stock market? NASDAQ's got 2 distribution days and the S&P's got 2 distribution days. So the days of selling are actually starting to increase on the NASDAQ, which does have an impact on whether or not the market can continue higher. Okay? We go and have a look at the chart itself and just put it into perspective where we are with the volume. You look on the bottom right here. Let me just wait for that. How MicroStrategy, how you doing? Okay, gapping down again. So all of that for last week for nothing. Anyways, quickly having a look at it. You can see here, look, NASDAQ starting to build up quite a few distribution days. Okay, so today on light volume, it nearly got above the average on the bottom right down here. So that is something that we need to take into consideration. We then park that idea and then go over to the smart money concept. Not smart money concepts, just smart money and dumb money. And right now, smart and dumb money is very confident, whereas smart money is neutral because the reading is around 50. But we've seen that as assets have been going up, smart money has been selling. So we're now looking for a peak right here to effectively see the smart money line going up, which would suggest that assets are going to come down so they can start buying it on the cheap again. And obviously macro data that's coming out could lead investors to believe that maybe the market is going to start coming back down again because the distribution days are starting to build up right here. But more importantly, the consistency behind the idea of euro still going up, yen still going up, gold still going up means that investors are still seeking safe havens. And on top of that, to put it into perspective, the 10-year bond market, great news on the European tariff story, but they just gave it all back and it didn't do anything. Okay, so that means investors have priced in the idea of the tariff story. They know what to expect with Trump. The yields are still trading positive or up still. 10-year still high. 30-year is still high. And the 2-year is trading positive. That means that if the 2-year is trading positive on the yields, it means that investors are demanding more rate of a return to buy a shorter term dated security, which means that they're not going to commit to the longer term dated securities because they demand a higher rate of return, which explains why your bond market is taking a shoe bag to the downside, okay? And the rest of the week is going to reveal to us whether that logic is going to continue. And that's the problem with the marketplace. One bout of data comes out or Trump says something, it sends the market up, sends the market down, okay? So they price it in that moment. But the fundamental thing is everybody is seeking a safe haven because they don't know what the future holds. The US deficit is the main thing right now that investors are focusing on. So going back into it, maybe these holders are anticipating that Bitcoin's price is going to come down. That's why they're releasing a little bit of liquidity to prepare for the next move down. So now take all that information and ask yourself, is that a bearish sentiment or is it a bullish sentiment? No, it's called, how is the market preparing for the next move? And that's your job, ladies and gentlemen, as traders, to try and work that out. We are in macro-driven environments. Trump posts something, the market moves. Trump says something great, the market drops. Trump says something bad, the market rises. Trump says something neutral, the market stalls. It doesn't make sense. Okay. And that's what the problem is right now. Once we know where we are with tariffs, I personally believe that Bitcoin will keep on rallying, okay, freely and not be subject to changes in the stock market, okay? Because remember, if you're holding a balance of more than 10,000 Bitcoin, you're either in the know, you're either lucky, or you've got a few friends that know a thing or two about what's going on in the bigger picture of things. So if these guys are selling at these highs, they're obviously preparing for something later on, which means that get ready because money's coming back in. They're taking it off now whilst retail runs in and goes, oh, I'm buying Bitcoin, yay, and all that shit. But the big boys are selling to you and they're getting ready for the next moment when you guys start selling because they're the ones that are going to buy it. And that is evident with this sort of behavior here. Mark my words, you're going to see exactly the same thing right here, okay? And then you're going to see it shoot back up. Go back and watch as many lives as you can, ladies and gentlemen. Those of you who are new, I make reference to this chart all the time, and you'll start to pick up a pattern. You'll start to recognize because I dive into where the orders are being filled. And what you'll find is at every peak at the lows right here, okay, there's always a big order, okay? And it's always that big order that ends up sending price up or triggers interest to start offering Bitcoin higher. I hope that makes sense, ladies and gentlemen. Tino, can you talk about session sweeps like session low sweep usually lead to an up direction? So I spoke about this in the weekly review for the platinum members. I did a weekly review on the story of session sweeps and what have you. And just to summarize it, what I like to wait for with Bitcoin and all assets is if I've got Bitcoin or any asset stuck inside of the Asian session, I always encourage everyone to wait until one of the sides gets taken, because usually what usually ends up happening is this: when one side of the Asian session gets taken, so for example, this one, when they sweep up, the principle says that it's going to come down towards the vector candle because they've grabbed the liquidity here and rolled it over. But we're down principally, we're down liquidity because the UK and the US haven't been trading. We haven't been able to understand where investors' heads are at in terms of the bonds. The bonds market's closed. The NASDAQ only traded half a day. The stock market hasn't opened at all. So tonight, when the out of hours markets get triggered, investors are going to be able to start putting money into the markets again, which is going to be in the next hour or so. Okay. And that will then start really pricing in where investors' heads are at right now. Okay. But when you look at the sessions themselves, they are just areas of where liquidity is, because anyone that's placed any shorts up here are going to get shaken out. Anyone that's placed longs up here on the breakout have been shaken out. So it's all about paying attention to the ranges. But the most important range for you all to look out for is the Monday Asian session range. This is critical for your trading throughout the week. Why? Because it's going to reveal to you if they do decide to break above this point and continue higher, you've pretty much got an up week, okay? If they break below the Asian session low, you've pretty much got a down week. And the idea is as follows. You see this happen, break, retrace, continuation. It will probably just keep on going up, okay? And then likewise, when you see price come down, break, retrace, continuation, it will just probably keep on going down. You want to see the proof of that? Let's just work on hindsight for 5 minutes and look at what it did here. So Bitcoin, Asian session high, Asian session low from last week. Okay. What did they do? They broke out of it over here. And then for the rest of the week, they traded away from that point. Happy days, right? Let's go to another point when Bitcoin wasn't trading as extensively. So look at this. Asian session range. They stayed within the range throughout the rest of the week, because they couldn't get above it, they couldn't get below it. So Bitcoin was pretty much flat. So it was a bit of a dead week. Let's go to another week where they actually moved. So look at this. So you got the Monday Asian session range that was formed right here, yeah? So let me just move that. I'll look at that comment in a second. Please, Tino, tell a nice story. Okay. So Asian session range, high, low. They broke away from it on the Tuesday. Usual consensus says they're going to continue away from it. So the Asian session range for the week on the Monday, kind of acts like an opening range breakout strategy where you either take the first 15 minutes of the open or the first hour of the open. You can even take the first 4 hours of the open. It all depends. I don't know why you do that, but anyway. But that principle in itself gives you the idea. And look what I just did there. How price comes up, it retraces, tests, and continues away from that point. The same logic would be in this range right here. Like, for example, comes down, retrace, break, higher. That's what the logic says about the Asian session ranges, okay? So just go back in the charts, and if you haven't downloaded the hybrid system, go and download it. It's on the front page of the Traders Reality website. It's right there. Where is it? Anyways, it's on the Traders Reality website. And just go and mark off every single Asian session high and low that's formed on a Monday and look at how price behaves. And what you will find is this. The more you keep going back in the charts and looking at those ranges and identifying them, you will start to develop this pattern in your mind about how it evolves around that range, okay? And you'll then start to get a variation of it. It won't always break up continuously and break down and go continuously. But when you go back in the charts and register that in your mind, you've then picked up on a type of behavior. And then it's a case of you allocating risk each time you do believe it's going to continue away from that point. Then you're going to trade that logic based on your understanding of how many times you've gone back in the chart and witnessed it before. Because I can promise you this, they'll break the Asian session high, come back into it and continue higher, or they'll break the Asian session low, come back into it and continue lower. So I'm giving you the two guaranteed events that can happen. We've just got to try and find out if the one that we do decide to take is the one that continues in the direction that we desire. All right. Other than that, ladies and gentlemen, I hope you enjoy that. Mad love and respect. I really want to answer that question about the Bank of Japan, but that's going to be something about for tomorrow, which is really important because we're getting close to what could be a hike in the interest rates for Japan. With that being said, guys, mad love and respect, and I'll be tuning into you all tomorrow. Happy Memorial Day, guys. Peace.